Hi, this is Zach here from Zach's Traders Cafe with a look at the major markets on Monday, the 18th of July. Starting off with the FTSE 100 and a decent hammer candle to end out last week. Support coming in there at 66.16 just above the 10-day moving average at 66.01, and perhaps more importantly, just above the initial July resistance at 66.12. Basically, while we're above 6,600, we're looking to 6,800, which is this February resistance line projection. At this stage, really only well below the initial support there for July at 64.32, really being negative for this market. Onto the DAX, and here we have a market which still has been relatively resilient. Trying to get back within the towards the top of the range from the end of February rather. Support here notionally at the 50-day moving average 98.93, just closed towards the 200-day line, just around the 10,060 level, and an end-of-day close through 10,100 should be enough really to push us back up to 10,400, which is the top of that rising trend channel feature from the beginning of the year. Onto the US markets, which have obviously been the main driver for the European ones. 18,800 was the target once we broke 18,000 on the Dow, and that seems to be panning out very well indeed. In fact, only another few hundred points to go. Probably can say that we'll hit that 18,000 area, 18,800 rather, by the end of this week. Only back below the 10-day moving average, currently at 18,172, really delaying the upside scenario for now. As far as the S&P is concerned, here we had the promise that above 2120 we're heading for 2200, and we are halfway there at the moment. Any dips towards the 2150 zone currently regarded as a buying opportunity ahead of that 2200 target over the next week or two. For the Nasdaq, also good gains in the recent past. Here we have a bit of a slowdown around the 4600 zone, but we have cleared that former resistance from April 4574 and above that, looking for 4700, which would take us back to where we were in November, December last year. Onto the currencies. For cable, we've got a situation where in a sort of range now, really up towards the 135 zone. Resistance there also from the 20-day moving average at 134.45, and really while we're below that 20-day line, probably risk another test of the 10-day moving average at 130.91. But at this stage, nothing worse than that, given this overall inverted head and shoulders pattern, which seems to be, or could be, let's say, quite strong over the rest of this week, despite Friday's fall. Onto the euro, and here's a picture of same stagnation really either side of the 200-day moving average. That's the black line there at 110.88. Really looking for an end-of-day close above the 20-day moving average at 111.20 as a buy trigger. Otherwise, continuation of the recent range between 110 and 111.50 is expected. For dollar yen, this has been the great bounce back market of the recent past. Stalling a bit at the 50-day moving average, as one would expect, 106.23, but we do have potential upside towards 107.50, which is that January resistance line projection, and presumably for traders that would be the initial selling point. Something else to note though is the way we've had a double dip at the 200-day, at the RSI 50 level to leave it at 55, which is a decent continuation signal on the upside. So if there is a setback around 107.50, one would expect it to be relatively temporary. On to gold to finish off with this sequence, and here we've got the metal sandwich between around the 1320 level, which is the 20-day moving average, and the 10-day moving average at 1347. End of day close back above the 10-day line is really required to give us that big 1400 plus target. Otherwise, there's a chance of 1283, which is the 50-day moving average area, and also the floor of this rising 2016 prize channel. That's it from me. More updates at the same time tomorrow.